Alright, since we had many questions about how the whole tax return process works, I decided to create a longer video where we go a bit more in depth and explain how everything works. So let's have a look at the general process of tax returns in Switzerland. In general, the first question that comes up is whether you have to do the tax return or not. There are two categories here: taxed at source or ordinary taxation. Most of our client base are expats that relocate to Switzerland and have a B permit. In this case, the tax is withheld from the wage automatically, called withholding tax, meaning your employer is deducting it directly from your wage. You don't have to do anything here. Later, when you apply and get the C permit or Swiss citizenship, you're not taxed at source anymore. But you will have to pay something called a Kontorechnung. It's like a provisional invoice for your taxes to cover the tax year in full. Then, after you did your tax return and the tax authorities do the tax assessment order process, then you will find out how much or how high your actual tax bill is. Withholding tax and the 120k threshold. If you're earning less than 120k and are on a B permit, then you just pay your withholding tax and you're done with it. There's no further action required from your side. You can, however, though, apply for a voluntary tax, meaning you can say, hey, I want to do my tax return since I am sure that I can deduct way more things and my final tax bill will be lower. We'll go a bit more into depth in that in a few minutes. In 80% of cases, actually applying for this voluntary tax return, if you're earning less than 120k, is to your benefit. We'll go full depth into that topic in another video, since I could talk half an hour just about this complex topic. Then, if you're either above this 120k threshold, or you receive dividends, or you receive alimony, or have foreign assets like real estate, then you have to do the tax return and you have to inform the tax authorities that you have these foreign assets or foreign incomes or other incomes in general. If you're earning more than 120k and that's the only thing, the employer will notify the tax authorities also automatically, so you don't have to do anything here in that regard. In most cases, you will receive the tax submission code from the authorities automatically. If you don't receive the invitation for the tax return with the submission code automatically, just let the tax authorities know real quick and you'll receive it. Sometimes it can happen that some people just fall through the cracks. All right, let's assume now you earn more than 120k and you have to do the tax return in this case. In this case, the withholding tax that you're paying throughout the full year is not your final tax liability. It's just provisional. Filing your tax return is always done in the next year. So let's say it's 2026, you worked, paid withholding tax for the full year. Then in 2027, you will have to do the tax return for the 2026. And then the authorities will assess, hey, is that tax liability covered by the withholding taxes? Or is there something that this person has to pay on top? Or is there a tax refund that this person will get? In most cases, roughly 70–80% of cases, doing a tax return will actually lead to a tax refund. However, in the remaining cases, it can really lead to an actual higher tax bill. So that means that the whole withholding tax that you paid is not sufficient to cover your full tax liability that you have towards the government. This depends on many factors, so we cannot tell you a flat rate answer for you. We would have to calculate that if it makes sense or not to. That depends on many factors, so there is not a flat rate answer to tell you, hey, will you actually get a tax refund or not? But small things like having a third pillar or having high education costs or commute costs are indicators that show, hey, when I file my tax return, I'll actually be able to increase my chances to get a tax refund. Why is there so often a difference between withholding taxes and the final tax bill? Well, with withholding taxes, you work with tariffs, okay? It's a certain percentage that will be deducted from your wage. And also important note here, in a particular month where you get a bonus, for instance, this percentage can skyrocket since the tax rate in Switzerland is progressive. In that particular month, you will pay much more in percent than in the other months where you just received your normal wage. This tariff or category that you're put in is influenced by a few different factors. It is your salary, if you're married or not, if you have children or not, and also which religious affiliation you have. For instance, people that are Roman Catholic in most Swiss cantons pay a bit more tax than the other ones. And obviously, these kinds of tariffs don't paint the full picture of your situation. Therefore, this tariff that you're in cannot represent your full tax liability very often. Additionally, you're actually able to slice a little bit of parts of your income. So doing a tax return gives a broader picture and you can deduct way more expenses than these flat rate expenses that you can do. Therefore, a tax return with all these deductions that the Swiss government allows you to do is a way more realistic picture of what your current situation is. That's why I say in 70 to 80% of cases, we see that after filing a tax return, there's quite a bit of a tax refund that most people get. So if you're doing the tax return yourself and after submission of the tax return, you end up with an additional bill for your taxes, that doesn't necessarily mean that you've done something wrong. It could be, but doesn't have to. It could also mean that in your canton, being with withholding tax is more favorable in your specific scenario than with going with the tax return. If you earn more than 120k gross, then you have to do the tax return anyway, so there is no remorse in doing that. But for those people that earn less, we really recommend to check before they change to the ordinary taxation.